Hello and good afternoon from London. My name is Mikko Hietanen. I'm the Chief Revenue Officer of DreamQuark, a French fintech startup. For the next 20 minutes, I'm going to talk about enabling next generation customer insights and interactions, particularly with AI and particularly in wealth management. Artificial intelligence, AI, we've heard multiple times today, will give you the edge. And we agree. AI will for sure change the way we interact with customers and will change the banking industry profoundly. The journey has already started, but it will accelerate and continue from here. We've also heard that good customer experience can make a huge difference. And again, we agree. However, about 85% or so of all AI and data projects typically fail. And one of the key driving factors for that is that it's very difficult to deploy the AI in production, and it is very difficult to get the users to trust and understand the advice from AI. So trusted and explainable AI is a key factor in the success of AI projects. Wealth management, that we're using as an example in this presentation, can massively benefit from these trends. And we believe that we're only at the very beginning of that journey. There are two kinds of key demands for wealth managers today. Customer and regulatory expectations are both increasing at a rapid pace. Wealth managers have to balance their own needs to meet the increasing expectations of their customers, but also the more demanding expectations from the regulators. We'll talk about both a little bit, and their ambition to grow assets under management and their profits. Capgemini conducted a study that compared existing legacy traditional banks with neobanks and digital banks. And one of the definite weak points that was flagged by financial services users in the study was the lack of personalized updates about new products and services. This was the touch point with the least client satisfaction on one hand, but also had the most wow factor for the neobanks and the competitors of the traditional financial institutions. Quite a complicated chart, but very useful and very powerful information in there. So wealth management customers are expecting more and better service from their financial institutions. And of course, they have more choice than ever available to them. Lots of neobanks, lots of digital banks, lots of different kinds of institutions that allow them to manage their wealth with. We mentioned regulators, and there's a big trend at the moment, both in the European Union, in Singapore, eventually also in the US, to regulate the use of AI and to make sure that the AI that people use is not just a black box any longer, as it traditionally has been thought of. PricewaterhouseCoopers has a great report on this one, and they categorize the different kinds of regulatory areas into some of the key ones, which is data protection and security. Obviously, you need to make sure that you operate the AI in a safe environment. You need to make sure that the AI and the users of AI are accountable so that you can always trace back the decisions and the advice and let people know what the reasons were that impacted the decisions that they were given. AI needs a lot of governance, and that's why it's difficult to deploy it very quickly, particularly. You want to make sure that your algorithms don't produce any bias, and you need to be able to prove that they don't. And finally, as we mentioned, one of the big things to make sure that AI projects are successful is explainability. So marketing and customer advice are definitely some of the key use cases for responsible AI. We firmly believe that you can use AI to make better decisions, to serve your customers with an edge. And some of our customers in wealth management, BNP Paribas globally and Crédit Agricole and the Suez, are doing exactly that, using our product Brain to increase customer loyalty and to improve their profits. When asked about the key emerging technologies that will have an impact on wealth managers' businesses, 63% and 71% respectively mentioned that advanced data analytics and artificial intelligence are the most prominent and most important tech trends that they want to follow in the near future. That's also from Capgemini. I wanted to also share some figures and very interesting findings from Gartner, who have done a great report into the wealth management tech trends. This is from April this year, so probably data gathered just before lockdown, but nevertheless very, very relevant. Gartner highlight many things, but among them, two key trends, which are the democratization of analytics and the need for transparency and traceability in machine learning and AI. Let's just have a quick look at some of the findings that they've flagged in their report. In terms of democratization, the two key trends are really democratization of data and analytics. And there's going to be several tools, one of them, targeting data scientists, but expanding to target the professional developer community. So not anymore just deeply trained data scientists. After all, there are not enough of them in this world. Also, the democratization of development of insights, reports, actions, and things like that. Business units constantly suffer because they don't get the responses and the insights quickly enough, and they are not agile enough to change them. So it's very, very important that those developers and business analysts in the business units themselves are able to use these tools and quickly change the algorithms if needed. But of course, the algorithms need to be good enough. So the tasks that Gartner expects to be increasing in the business units are things like creating reports, running custom analytics, and launching those marketing campaigns for individuals that are highly hyper-personalized and targeting. In terms of the transparency and traceability, AI and machine learning are the key things that Gartner recognized will need more governance and more transparency in the future. Every time you're using clients' data to determine unmet needs, you can find a goldmine, but you can also get into trouble. Also, using AI and machine learning to power things like next best action recommendations, but then to articulate why the decisions are made and how the client data is actually used to make those decisions is very, very important. And we believe that these are the trends that are going to dominate the discussion, not just in wealth management, but financial services more broadly in the next years to come. So I wanted to introduce you to DreamQuark and the things we do. We have a platform called Brain, and Brain is really a fully automated AI platform, but not for highly trained data scientists, rather for business users, business analysts, people who are close to business, have an understanding of data, but are not really PhD in data science. Brain can quickly score customers, for instance, for risk of churn and propensity to buy, and it can turn your data, your existing data, into action in just a few clicks. So let's have a look how we do that. Here are examples of 3 customer value focused actions that allow you to deploy the trusted AI out of the box by using any available customer data, which could be coming from your CRM system, customer lifecycle management, contact history, know your customer type information and profiling, and of course, information about the existing products that your customers have. We can quickly help business teams answer these 3 questions. Number 1, looking at all the customers who have already churned, there will be some. How likely is it that this customer that I'm marketing to right now, that I'm talking to right now on the phone, or that is currently logged into my customer portal will churn, and why? We'll come back to that in a second. Looking at our customers who already have a particular product, say advisory in wealth management, how likely is it that this customer will buy it next? And why would that be? What are the reasons they will or won't buy it? And thirdly, looking at all our customers and all the products they have, which customers are most likely to buy which products next and why? These are the typical, fairly basic, you would say, business problems that business units still struggle with in wealth management. And we can solve them very, very quickly. And very importantly, every Brain score comes with an individual explanation for the reasons for the score. And you'll see in a minute how powerful that is and why it's so important. This is why we say that business analysts on their own can turn their data into action in a few clicks. So let's have a look what Brain looks like then. How do you establish deep learning in a few clicks? Well, in a typical wealth management organization or in a typical bank, insurance company, most users will actually not be using Brain directly. Rather, they will be using the insights and the advice that comes out of Brain into their other CRM and customer lifecycle management applications. For instance, here is a CRM screen for a wealth management customer, Miss Analytics, who's called in, or maybe the advisor, the relationship manager, has called her to conduct some kind of a review, quarterly, monthly, annual call. There are two pieces of insight and two pieces of actionable insight embedded into the CRM screen here that comes from Brain in the background. First of all, the churn score. In this case, it's 0.378, 37.8%. And I would probably say that that's an amber score. It's not extremely high, but nor is it low, nor is it comfortable. Why would it be that? What does it mean? Well, because Brain gives you the explainability, which you can see underneath. The advisor has a clearer idea of what has driven the churn score for analytics. And in this case, the customer insights team in the background through their own analytics has flagged that she is a prime target for some of our digital and virtual competitors, the so-called neobanks, who have poached customers just like her from us before. So every time we interact with her, we have to wow her. We have to offer her personalized and good service and very, very pointed and useful products so that she feels that she is safe and happy to stay with us and keep her custom here. We've had some interactions with her, quite a lot of them, and there are some other factors, including her age, that have driven that particular churn score for analytics. At the same time, on the same screen, potentially, or maybe on a customer portal, when she logs in there herself, we get advice from Brain about the products and services that analytics should be interested in. In this case, we've got 3 recommendations: pensions, low match; mutual funds, good match; but a very high match, an excellent match for sustainable investment funds. Now, that's interesting. So I should probably, as the advisor, try to sell her some sustainable investment funds. But why? Well, again, we get the explainability, we get the factors that contributed to that score. And we can see that in her case, she's shown some interest by browsing documents, maybe downloading information, watching a webinar or newscast on our sustainable investments on the portal, which is great to know. So she's definitely interested in products and maybe has done some research in the background already. She set up a family trust fund, so she's probably interested in the future and investing in a sustainable way for her family and her children. Her investment horizon is moderate, and her risk appetite is fairly low. Great. So now I have a script in mind that I can use when I start talking to analytics about the products and services that we want to sell to her to keep her as a loyal customer for Max Gain, the bank that I work for. Right. So let's have a look then how easy it is to create these scores. This is now under the bonnet in the engine room, so to speak. This is the end product. These are the scores that we see on the other screen. And I just wanted to highlight something that is fairly interesting here, and again shows the need for the trusted and explainable AI. If you look at 2 rows here, rows 5 and 9, they both are people who are likely to take this product, or maybe in this case, likely to churn. I don't know what these scores are necessarily for at this stage. But the point is that they have very similar scores, 0.82, 0.85, so in the same neighborhood for sure. However, if we look at the individual reasons, the explainability behind those, entirely different variables in entirely different order actually drove those 2 scores, and the related product recommendations, of course, would be driven by potentially entirely different factors again. So just giving a score to the advisor, just giving a score to drive a business process is probably not going to be enough. Instead, it's very important to share the reasons and the explainability with the people who actually deal with the customers in the front line. Otherwise, there's no action with the insight. Overall, the Brain product is very, very easy to use. For the business users, as I said, you don't have to be a data scientist. You don't have to be a rocket scientist. It basically walks you through what's in your data. What do you want to predict? What's your target? Then gives you basic analysis and warnings about the data. You know, this variable is not very clever. If you predict using this, you might actually not produce very, very representative answers. So it does all the basic checking and all the basic intelligence for you. It then actually goes and generates a huge number of different kinds of models using deep learning and chooses a number, typically 5, for the business analyst, for the user to choose from. So here are the 5 different kinds of models, and I can then go and inspect them and tweak them and maybe modify them the way I like. So this could be a model, for instance, to predict churn, or maybe this is a model to predict the propensity to buy a certain product. And I want to create a targeted campaign to upgrade people from service A to B, or I want to create a very high impact marketing campaign to the most valuable customers who are most likely to churn. And in this case, the model says that if you target just 9.36, so just under 10% of the entire population, you will be able to reach 90% of the people who are likely to take action, whether it's churning or buying a product. Again, huge return on investment. If you use this kind of technology in your marketing campaigns, on your customer portal, in your CRM applications, at the fingertips of the people who actually care for your customers, and you create that stickiness, and you create that excellence, and you create that edge for them to serve their customers in a personalized and better way. So, in conclusion, as we said, AI will change the way we interact with our customers. And AI has been around for a long time, but we also feel that the journey is only just starting. However, the users need to trust and understand the advice from AI. Otherwise, there might be insight, but there's definitely no action. And without the action, you will not be able to give yourself the edge, move the needle, and actually achieve the business transformation that you're using AI for in the first place. AI can give you the edge for the next generation customer experience. It can really, really understand deeply why customers are behaving the way they are and what you should do about it next. And in summary, with technology, you can go from your data to action in just a few clicks. I hope you enjoyed the presentation. It's been fun talking to you, although slightly strange not seeing anybody, but I hope there have been a lot of questions, and I'm happy to stay online to answer any further questions you might have. And if you want to, please check out DreamQuark.com, and we can talk more about how you can enable your next generation customer insights and interactions to give yourself the edge. Many thanks, and all the best.